Trillion Energy. We're going back to Turkey with this story. Another Turkey gas development story. We have Arthur Halloran, President and CEO, to take us through what Trillion's doing. But the company's had a lot of success in their development. They've been putting out all their well results and consistently coming in as expected. And with that, the production ramp up has been quite nice. So with that, I'll hand it on to Arthur to take us through the Trillion story.
Thank you very much, Adam. It's great to be able to present here. So I'm Art Halloran, CEO of Trillion Energy. And like Adam said, we are an oil and gas producer in Turkey. And right now our main focus is offshore Turkey, about 8 kilometers, a large gas field or a number of gas fields called SASB. And we're in the process of developing that project. And this picture here is one of our platforms. This one's called Akachoka. We trade on the CSE, Frankfurt, and the OTC. So the company highlights are we are 49% owner of this gas field. It's called SASB. The other 51% is owned by TPAO, the Turkish Petroleum Company, the government company. And we operate the drilling because we have the expertise for shallow water drilling. And we're in the process right now of a multi-well program, which we started with September, October. And right now on the field, we have probably about 300 BCF original gas in place. But this drilling program we're doing right now is just focusing on 100 BCF. And we have a large infrastructure in place that is already done that we got when we purchased the predecessor company in 2017. And Turkey, we have a high gas price and very good fiscal regime, 12.5% royalties, never changed. And we have a corp tax of 22%. Our shares, we have an excellent liquidity. And just a couple of days ago, actually last week, 33 million shares traded in one day, and we average probably about 4 to 5 million shares trading a day. So the overview of Turkey is part of Europe. It's part of NATO, as you know. It's a very large populated country, and they really are focused on gas as their transitional fuel. They import 98% of their gas. They're the 7th largest natural gas consumer in the world, and 60% of that gas that they import comes from Russia and Iran. We're in a high gas price environment currently right now, and for the last 4 months, it's been about $14 US an MCF. And how it works, there's a company, that's a government company called OTAS. At the beginning of every month, they import into the country volume of natural gas, and they set the price, and we get the same price as what importers get for their gas, even though we're domestic. And what it does, it kind of mutes the price increases and decreases, so it's more stable, and we don't get the wild fluctuations. And as everybody knows, right now the gas in Europe has increased. And we're still at the $14, whereas when it was below, we still stayed at 14. So it kind of levels it out. So as I mentioned, our property, SASB, is in the Black Sea, and it's about 12 kilometers. And the Black Sea right now is starting to develop and become a potential natural gas supplier for Europe. And there's some fairly big discoveries in like Romania, Bulgaria, Romania. And these discoveries, we're talking in the order of TCF and also hundreds of BCF. And recently, not so recently now, but within the last year or so, the TPAO, the Turkish Petroleum Company, did a big discovery of about 10 to 23 TCF about 100 miles north of our field, SASB. And what that has done is that before in our area, we thought or we didn't think, but the thinking was there wasn't enough gas generated to charge larger structures. So there was a conscious effort to chase the smaller structures. But with this large discovery, it illustrates, yeah, there was the proper oven was going on, and the evolution of the basin, that there was a lot of gas generated to fill the larger structures. So now we drill down into our SASB. So in Turkey, we also have an oil field that is a long-term, low decline oil field. It's basically water recycling with an oil cut, like a lot of Canadian type oil fields. And we might produce for a full year 40,000 or 50,000. That's our interest. We only have about 19%. But by the end of the year, there's usually a technical write-up, and we have recouped those reserves. So the decline is, at this point in time, is very low. For the SASB, we have third-party engineering reports. We have NI 51-101 compliant end-of-year reserve reports, and also an update in January. And we also have a third-party resource report, and that gives us a different levels of reserves and resources. But SASB has a lot of gas, and right now the original oil and gas of the reports is over 300 BCF, and I'll have to say that to add a resource and a reserve is not really under the NI 51 regulations and so on, but it gives you an idea of what there is, because there are different category reserves and resources. For the reserves, our update of January 2023, and this is again NI 51-101 compliant. We have a P2 reserve of 63 BCF. That's our 49%. And that increased from 20 BCF from when we started the project in December 2021. And the pricing was about half a billion US dollars. And of course, with the pricing, it goes up and down. Since we started this project, September, October, we now have 5 gas wells that we have drilled, and actually 4 gas wells we drilled and 1 we completed. And on top of this, we have a bunch of resources through extensional type and development drilling for the reserve projects, and also some exploration. This is SASB field. You can see the shoreline. One of our competitive advantages is that we actually have existing infrastructure, which was probably to replace it would be about $600 million US. And it's an onshore facility, gas gathering pipelines, and 4 platforms. And if you look at this, you can see the platforms there. They were over 4 gas fields that were discovered and drilled and put on production, and they produced it's about 42 BCF now. But additional to those 4 gas fields that were put on production, there were 4 more gas fields that were put on production, and 4 more gas fields that were discovered but never put on production. Can you put one more slide here so I can get the overlay on it? So the whole project that we're doing right now is we are just directionally drilling from the platforms to tag into the fields that were discovered. And that means drilled, tested, mapped, but never put on production. And so since then, we have drilled since September, October, we've drilled South Akachoka 2 well, which you can see the first platform below that. And that actually was a exploration location. It was not a development. We also then recomplete Akachoka 3, and you can see what these wells tested at, 7 to 8 to 16, 19 million cubic feet per day. They were put on a 3 to 4 million cubic feet per day production for the average type well, and they were choked back, and I'll explain that shortly. And the other wells like Gulich was put on at 8 to 9 million cubic feet per day. But what we have now is West Akachoka, which also was an exploration, Gulich 2, which was an exploration. We have just finished Bahanli 2, and that's the one that we put on here June 1st. And so that's been on an average of 8 million cubic feet per day. And the only thing that we are now finding is that we are getting more gas than we anticipated. So some of the wells are producing extremely high, and they're backing out some of the production of other wells. But that's just a short-term issue to work at. Over a long term, all the gas will be produced. And what we've done now is we now have spudded Ali Pili 2, and we're probably at about 600, 800 meters right now. And so the whole concept is to piggyback on the existing infrastructure, and that's our competitive advantage, and directionally drill out from the platforms to the known discoveries. And now with the exploration, we can have follow-up locations. And I'll say it's not an issue to have locations because there's a lot of gas here. The issues are engineering and financing. And so we already have the onshore facility, which is rated for 75 million cubic feet per day, but we can up it to 150. But we'll never get to that point. This is just a quick figure of Akachoka field. So the red Akachoka in the middle, that's the well that we have recompleted, but that's where the platform is. So we directionally drilled in the long reach wells, South Akachoka, Gulich, and West Akachoka. And it allows us to drill and put these on way cheaper and faster. So we drill the wells, we test them, and we actually test within the facilities. And within one day, they're on production, and we're starting to get sales revenue. And whatever we produce in the month, we get the check the 20th of the following month. And also, it's easier to work over in the future. And so right now, we are reperforating West Akachoka and Akachoka 3, because those are the two wells that had some production backed out by Gulich. So the concept is to perforate larger intervals and bring more production on. This is just a quick slide on South Akachoka, and then you can see the old wells and then the new wells that we've drilled. All I want to show here is that we have numerous stacked pays. So it can be from 75 to 35 meters of gas pay in stacked sands, which again, for mitigating risk is very good. But we already know what's going to be here because these wells have these pools have either been drilled or part of a pool that has been drilled. What I want to show here is that we're right now in the process of understanding how to maximize the production of the field, because now we have 5 wells, and now we're drilling 6, and then there'll be 7, and so on. And we have the gas, we discovered the gas, and now it's to maximize the production. So South Akachoka was our first well, and we perforated about 22 meters of pay, and it was choked back. So it could have gone on production probably about 4 to 5 or 6 million cubic feet per day, but they kept the choke down because they were unsure of the behavior of the gathering system and so on, because the old production was at 500 MCF, that's 1,000 feet per day, and we're now in the order of 14, 15 million cubic feet per day. And so the idea is to get the field where you find the low pressure sinks. But all this slide illustrates is, first of all, it's a new well, and we're bringing new gas on, but it shows you that the initial production was choked back. And then as they opened up the choke, and this is an example of a well that we perforated about 22, 24 meters of pay, and then you get a long production decline, and then it'll level off and it'll produce level, not really level, but with a very low decline for a while. And when it gets to a certain production per day, we'll go back in and perforate additional zones. And this has been on since November. This is Gulich. This was what we call the monster because it was at a higher pressure. And when it came on, it was on at 9 to 8 million cubic feet per day, but we only perforated 5 meters. So it had 75 meters of pay, and we perforated 9 meters. This well came in on at March, but we get a horrendous amount of flush production. And then you can see the decline rate, and it'll go down. And at the very end here, just last week and so on, again, there was a change in choke, and the production is back up. But you'd get to a certain level, and then you would go back in and reperforate another 4 or 5 meters, and or we're leaning out towards a larger perf intervals, and then the production will go back up. And that's what we got to do is as we get the fields develop with more wells, it will be going back into each well every 6, 8, maybe 12 months to perforate a new zone. The production profile will go back up to like in the original because it will be an unproduced gas zone. So if the well or pool produced, we put it on say 8 million cubic feet per day, the assumption can be is that it'll be slightly higher up in stratigraphic interval, but if we perforated, it'd be up probably to 6 million cubic feet per day production. And you know, that kind of production profile. So it'd be just like a new small well each time. What I want to show here is that I've been talking about the structural prospects, the ones that we have a reserve report or resource report. As everybody knows, we're getting the seismic reprocessed. It's a 3D seismic. It has AVO anomalies. We had some work done initially on the data, and that work should be done here by middle of fall, and we'll be picking locations. So the end of December, we'll have locations picked. But we went back at the old data, and the geophysicists recalculated some of the algorithms. And what has happened is that you can see the existing structural fields. So it's Eskadale, Akachoka, Gulich, but the round circles are indicating stratigraphic exploration, AVO anomalies that would be new pools that are not connected. These pools would produce the same as the structural ones. They would take less wells because they would not be broken up. It's like on-lapping sands. Again, it's stacked sand, same stratigraphic level, same source rock. It's just that none of these have ever been drilled. So they are a total new prospect, and therefore they can't be given a reserve or something, and they're classified as exploration. And there's a lot of them. You can see that some of them are the same size of the known structural pools. Because we're dealing with a thick stratigraphic section of you know, a couple of 100, 300, 400 meters, you can get slices. Here's another slice of the stratigraphic interval, again with the seismic AVO anomaly, which from experience actually identifies or sees gas saturated sand. And basically red means good. And here you can even see a meandering channel. The white circles are the fields that were discovered and were producing and so on. And the red is indicating a high probability of gas. So what this shows you is that there's way more gas here than even I thought there could be. So that is on the block. We have the structural old known pools, the reserves that we're drilling, exploration and development of the structural pools. We also have the stratigraphic pools now, exploration on SASB. And like I always mentioned, it doesn't end at the edge of the block. It's got to carry on. It's showing you that there's a lot of gas generated here. There are reservoir rocks, there are traps, and we know there's larger structures, and now we can look for on-lapping. We used to own all the red, and the little blue is our block for SASB, and the southern red line is the shoreline. The northern red line is, after that, you have to partner with TPAO, and you can see to the north that that's the 19 TCF discovery. we have the 3D seismic, we have all the geology and the modeling. And so I've said this many times, but we're in the process now of identifying off SAS block gas deposits, which would be in the order of 3 to 400 BCF and potentially a TCF, but it is exploration. So we know a lot of gas is generated, but I have to say it's exploration. But also now with our success that we're having, there's a lot of chatter about us because we went from 500 MCF, that's 1,000 cubic feet per day, to in the order of, right now we're at 14 million cubic feet. And that's because we turned off Akachoka 3 and West Akachoka because we're completing those. When those two come back on, they should be in the order of at least 3, and that's a conservative number. And that would be a 20 million cubic feet per day. And we're continuing to drill. So we are now we are the largest independent gas producer in Turkey. And there's a lot of chatter about our success because of the technical difficulty of the wells, that we are getting across our table a lot of exploration and development projects in Turkey. So we are looking in Turkey for not just SASB type, but other types of projects. Yeah, so a quick summary is natural gas project in an area where gas is needed. It's Europe. We have a huge inventory of gas projects, gas wells to drill. We are successful 5 for 5 so far, and we are targeting 100 BCF, and that's a plus because there's a lot more, as you can see, and we are a success story.
So let's hop into some of this Q&A here. Quite a few things coming in through the chat. So first one, is the approximately 14 million cubic feet a day flow rate total? So your portion would be about 7 million cubic feet a day?
That's correct. Right now, that would be total. And a large part of that is because, like I say, they still choke back the wells.
Three-part question here, or 3 questions from one interested party. One, could you provide more details around the re-perforation of the first well to increase its production, or their first wells to increase their production? How many wells are going to be re-perforated, and when? What the increased flow rate can be expected, and what's the timeline for this?
Okay, so we're recompleting West Akachoka right now, and also Akachoka 3. And the reason why, like I've said, is that with Gulich, we had, it was a high pressure well, really kicked out, that it backed out the pressure. So we are recompleting there right now. So Akachoka 3, we're going to complete probably 15 or so meters, mainly the remaining pay in Akachoka 3, because that's an old well. West Akachoka, we're going again at probably a 4 or 5 meter, 7 meter interval. The new perf intervals will produce like a new well. So it's because they're separated, they're not in communication. So it's like a new reservoir. So like I said, if the old well was, even if it was, I can use a choke number, put on production at 4 million cubic feet per day, and that was choked back, as you saw with the production decline. The new perf interval would be roughly the same. And so it's also an ongoing project. So because this is a conventional reserve, a conventional reservoir, it produces a lot of flush production. And so we get good cash flow, and then the production declines like you saw. So when we get down to probably about 1 million cubic feet per day, we'll go back in and perforate another zone, and then we're back to the normal. And we'll do that over the 6 to 10 year life of the reservoir. And it's probably depending on the well, between 6 to 12 months, we'll go back in and reperf those. And it's very inexpensive because it's a wire line that's on the platform. So it's about $200,000 for a reperf job. So we don't need the rig.
Second part of that question stream was, could you please provide more details on the stratigraphic targets in the SASB block? Will they be perforated once 3D processing is done, around 3 months, or when? How big are they, and what would their approximate expected flow rate be?
So the stratigraphic right now are exploration. So what it is we have the structural, and we can see in the seismic, the AVO anomaly. We drilled it, and we know that this certain signature is definitely gas. So for the stratigraphic, none have been drilled yet. All we see is that in the old seismic, and as you see with the new stuff that we've done, is that we can see the same AVO anomaly, and they are stacked. They're at the same stratigraphic level, but they're at the flank of the structure, so they're at a deeper depth. So they'll be at a higher pressure. They probably will produce at a higher rate and have more gas volume per area, but they will be predominantly similar to the structural wells that we are drilling. The assumption is, and it's not known until we drill it, is that because they're onlapping, what I mean is they're blanket sand stacked, and they're not related to a large nose structural. They're not going to be broken up, and a single well will produce and recover more gas in a stratigraphic trap than in a structural one.
Okay, and the last question, last question from this participant, comments on off-block acquisition time and size of targets.
So off-block, there's two types now. One is following the SASB type, off our block, and that is just in the process of working out the work program and then coming up with the bid, which is the work program, and you put a bond, which is actually 2% of your work program, and we already have those sitting in our shelves. We know which one we want. We just would like to wait until we see some of the reprocessing of the seismic. So we'll start seeing some of that in early fall, because the actual reprocessing will be finished in September. And because on these blocks, you're talking work programs of like 100 million. So it's better to make sure you have better data. So hopefully we will be towards winter and so on applying for the blocks. Onshore, we don't have that issue. Onshore, the wells take $2.5 million to drill, not 12 to 13 million. And we've already have looked at some blocks and are well on the way. And we're hoping to have some around the end of summer start applying for some of these.
Alrighty, I know we're right at 2 p.m., well, 2 p.m. Mountain Time, but there's two more questions, so I'll just quickly ask them. When do you anticipate bringing the two wells back online and getting over to 20 million cubic feet a day?
Those two wells, so West Acachoca should actually be on production here within the next day or two, and then they'll just move over to Acachoca 3 and do that. So both wells should be done within a week or so, and so that's when the production would be up to added to the 14. And that's the thing, is that the 14 million now is not including those two wells. It's only 3 wells at the moment.
Great. Last question. How does the company feel about regulatory, taxation, royalty, environment, stability of Turkey now that the election is concluded with Erdogan remaining in power?
Business as usual, nothing has changed. So we feel very comfortable.
Perfect. Well, great story, Art. You guys have had a lot of success with your development program. We look forward to seeing more.